Good morning and welcome to the Morning Market Review. Today is Friday, it's the 5th of April. My name is Russell Shaw, I'm a Senior Market Specialist at FXCM. And before we continue with the live stream, I'm just going to bring up our disclaimers and we'll start off with the high risk investment warning. And I'll keep this on screen for a few moments as you take a read through that. And then I'll bring up our market commentaries disclaimer. Okay, just another few seconds. All right, let's bring up the market commentaries disclaimer, if you can have a read through that as well. Hey, Bra Shadrach, good morning to you and welcome. All right, I'm just going to leave this on screen for a few moments. Hey, Kim, good morning to you and welcome as well. All right, let's go ahead, just bring up the real rate. Right, now the real rate, you can see, is moving in that northeasterly direction. We have highlighted that before. It's moving upwards like that. But what's interesting is I think we are capped. I don't see us moving much higher. Well, I don't see us taking out this 2% level. Okay, and if we go above 2%, I don't think that we can go far above 2%. I think we are capped. But the real story around this is whether or not we're going to get rate cuts this year or not. And if we don't get rate cuts, then we're going to churn. We're going to churn sideways, and we'll move laterally. I don't see that as being a good outcome for markets. And the reason I don't see that as a good outcome for markets is because we're staying relatively high in terms of rates, and relatively high is going to weaken the economy. And if we weaken the economy, then what's going to happen is that we are going to, I think, put pressure on the markets. So it's just interesting to see how the real rate evolves from here. Hey, Katie, good morning to you. The reason that I think it's worth just bringing in this sort of lateral movement scenario, which is a potential, is that Neil Kashkari, who's one of the members of the FOMC yesterday, insinuated that there may not be rate cuts for 2024. I'm not of that opinion, and the market's not of that opinion. There is a 65% probability that we cut in June, and unless we get data that suggests otherwise, I think we do get that June cut. So we'll just have to keep looking at this. Unfortunately, we're not going to be able to do it via the live streams, because these are effectively trading views concluding these. But I'll put out videos, and in some of those videos I will cover this, and we'll have to keep an eye on it. All right, let's just take a look at the stock markets, because stock markets actually tumbled yesterday. And if we take a look at the SPX 500, so we're taking a look at the S&P 500, this is the daily chart. You can see this big candle over here, right? This real decline. And we are down about almost close to 1.4% yesterday. Now, what's interesting about yesterday's candle, let's just talk about yesterday's candle, because it's quite a vicious candle. It was vicious price action. Take a look at the upper shadow, or the upper wick. What effectively happened yesterday is that markets took price up to the high of yesterday. It was actually looking like a positive day, and then effectively what happened was the bears just took over and just crushed the market, really hammered it down yesterday, and effectively took the candle out of zone 1, and we're actually now flirting with zone 3 all of a sudden. So it was really a vicious day on the market yesterday. If you take a look at the RSI, we have dropped below 50. Let me just fix up this. I want to make this green, like so. Beg your pardon, I haven't done it correctly. There we go. Okay, so you can see that the RSI has dropped below 50. So on the daily, we are on the bearish side of 50, and the stochastic has dropped out of its upper quartile. Now, that's significant because take a look here. The upper quartile, if we just take a look at the upper quartile here, that's associated with strength. That's associated with the upwards trend. Okay, so we've dropped out of it. So I think that's fairly meaningful. I don't think that we are changing trend. I'm not saying that. What I'm saying is that it has really changed technical structure. And if we are long at the moment, it's noteworthy that the technical structure has changed, because it's going to make our long positions much more difficult. It's been pretty cruisy for the first quarter, but now with the technical structure, it might be a little bit more difficult. And what KD is saying here, I think, is exceptionally useful. This statement: can it be a pullback for buying opportunities? My opinion of that, KD, is yes. I think so. I don't think that the trend has changed, but I'm not sure that the pain is over yet either. Right? If we go through to the S&P 500 weekly chart, and we've done a fair amount of analysis around the weekly chart. I'm just going to go bring up that tab here. This is the weekly chart of the S&P. We're still overbought. Can you see that? And what we've been saying is that at some stage the overbought condition on the weekly is going to normalize, and the longer that it stays overbought, the more painful the potential. Let me put it this way: the more potential pain the drop. Okay, so we still got some price action to go before we actually normalize on the weekly. So, hey Raj, good morning to you. So, just going back to the daily, I think that the daily here, there's a few ways that this can play out, and the first way is that we can drop further, and the longer that the RSI on the daily stays below 50, the more pressure the daily is going to be under, and the more pressure that the daily is under, the closer we come to normalizing on the weekly. That makes sense to me. The other way that I think this could potentially play out is that we actually get the daily oscillating around the 50 line. So it kind of bounces around 50, and that is effectively a trading range. And if the daily bounces along the 50 in some sort of trading range, I think that also gets rid of the overbought condition on the weekly chart. But what I think is important for us to know as market participants is that there is a technical normalization that needs to take place, and that's going to be that's going to be communicated by the media in fundamental language. So with Neil Kashkari saying that the rate cuts might not take place in 2024. Well, that's going to freak the market. But really what's happening here is that the technical overbought condition has to unwind. And, what we've said previously is that the market is actually ripe for some profit taking. So the portfolio managers have done exceptionally well in Q1, and to take some money off the table, I think is a smart thing to do, especially considering how frothy the markets are. And I think that's potentially what we are seeing. I do not think the trend is changing. I think that the underlying fundamental factors are very much in check. Let's go through the underlying fundamental factors. Strong economic growth, check. The fact that there is probably going to be rate cuts, despite what Neil Kashkari said yesterday, I would say check. The market still thinks there's a probability we cut in June. The fact that inflation still moderates, I would give that a check. Yes, I think the low-hanging fruit has been picked. I think it's going to be more difficult now, but I think that we still moderate towards 2%. And I think that the artificial intelligence story has still got a long way to go. So given those four fundamentals, I don't see that the market turning negative. I think that there is profit taking. I think that that is healthy. And I think, as Katie says, could it be a pullback buying opportunity? And my feel around that is yes, I do think that it's a dip in the uptrend, but we're going to have to be very disciplined over here because we still overbought. I hope that makes sense to you guys. If there's any questions, obviously I would invite you to type those into the live chat. What I want to do now is just take a look at some of the currencies and gold just to see how they are behaving. We'll start off with the US dollar, and I think the US dollar is obviously the first port of call here because it's got such a big influence on the other majors. So let's just go ahead and take a look at the US dollar on the weekly chart. And we'll bring up the FXCM basket there. All right. And I think this is an interesting chart. Let's state the obvious, and then let's say what the challenges are. So the obvious is it's above the 30-week exponential moving average, but the 30-week exponential moving average seems to be flattening somewhat. So I'm not sure just how strong the US dollar is trending at the moment. And in that vein, look what we've been looking for. We're looking for the peak and trough analysis. We've been looking for the higher trough followed by the higher peak. We don't have the higher peak just yet. So the US dollar is not trending. Gee, that makes it tough for us as traders. It's much easier to trade trends than it is to trade non-trends. And we don't have a trend at the moment. Why don't we have a trend? Peak and trough analysis defines the trend. We don't have the higher peak. We do have an insinuation that the underlying momentum is positive, and we have that because the RSI is above 50. But if I have to ask you guys, and I said, all right, describe this week's price action. And that's what's so cool about candlesticks. We can really get quite a precise explanation of what's going on with prices. So what is this week's price action like? Well, it's a spinning top. Bulls try to take price up, bears try to take price down, but we're kind of flat. So there's uncertainty, and there's uncertainty as we go towards what's the key fundamental release today? Jobs data. And we want to see if that comes in stronger than expected, or weaker than expected. Stronger than expected, that's going to be quite tough in the markets because it suggests that those rates remain higher for longer. Whereas if we get a downside surprise, maybe that feeds into the rate cut mentality. Maybe that's kind of supportive, but that's going to be a key data point for today. So just be aware that it is Jobs Friday. It's Jobs Friday today. And in terms of what time the release is, okay, it's going to come out at 12:30 GMT, 1:30 UK, 2:30 ZA. So high volatility at those particular times. Okay, let's just go through to the daily chart here and see what the zones are telling us for the US dollar. Okay, and we're in no man's land. So I'm hoping that we get some sort of clarity after the non-farm payrolls. But as traders, Well, it seems the currency markets are in no man's land if we take the cues off of the US dollar. And it looks as if the risk markets are starting to come down. If we want to short into a bull market, just be careful. That's a high risk strategy. Okay, a high risk strategy. My preference is to look for the dips in the uptrend. That's my preference. Okay. Let's just take a look at the precious metal, and then we'll take a look at DAX. And I think we haven't looked at oil for some time. Let's take a look at oil. Let's just take a look at gold, DAX, oil. So we'll go to gold first, and let's go through from a weekly down. Okay, and you can just see the weekly chart here is looking very strong. I think that there are overbought conditions here on gold. Okay, the way that I would highlight it, I'd just kind of draw a trend line, and then just take a look at the next trend line. It's like a rocket ship. Take a look at this trend line. It's like bang. It's almost gone vertical, right? And you can see that the RSI is over 80. So I'm not sure how much upside is left on gold for the current leg. I'm still bullish on gold. I think some sort of moderation at this stage would be healthy for the gold market as well. Let's just take a look at it on the zones, and let's see if that moderation is being hinted at all. Okay, so this is, I think that if we can get maybe just some sort of consolidation, some sort of ledge as it works the froth out of the market, gee, that would be first prize for me. So I do think that potentially gold has a cap on it, but I would say a short-term cap. It's an opinion. Let's see if that's the way it plays out. All right, let's take a look at DAX. I'm just going to go through onto the DAX daily chart. Okay, and DAX has gone into no man's land. And if you take a look at the weekly, okay, so when I say no man's land, it's gone into zone 2, but that's between the two blue, right? Just take a look at this on the weekly scale. So I'm just bringing up the DAX CFD, the FXCM CFD, and I'm just going to bring that up on the weekly scale. We're still overbought. So the analysis, the comments that we made on the SPX 500, I think are very much still valid for the DAX. I think, guys, that there are short-term price caps that are evident. I think above us there's some price caps. I think that if we get some sort of profit take, that would set up the next bullish leg, and that's potentially the dip in the uptrend. Okay, last chart. Let's just take a look at US oil. And the energy market, I think the escalation in the Middle East has really played into the oil market and the oil price. Where is oil relative to its 30-week exponential moving average? It's above its 30-week exponential moving average. What direction is the 30-week exponential moving average? It's moving in that northeast direction. We are heading up at quite a speed. Let's just take a look at this on the daily chart. The daily chart may be overbought. We may just need to be patient here and see if there is an opportunity. And you can see we're kind of drifting towards that overbought level. I'm just opening it up. Kind of drifting towards that overbought level on oil. And I think that the uptrend in oil is, we can add that to the watch list as well. Okay, so the trend looks strong on oil. I would look to see if there are potential dips that we can take advantage of. All right, that's as far as we'll go this morning. This is effectively the last live stream. Okay, so keep an eye out for our videos. I'll try and fill the gap with videos. I have a meeting today. I'm going to discuss potential solutions to live streaming. So keep an eye on our webpage for that as well. If you enjoyed this, go ahead, click on that boost button. I want to thank you guys for joining me. I want to wish you a good day ahead and a good weekend. And thank you very much. Cheers, guys. Well, our email, I think, Kim, it would be easier. Let me just put my email address. Sorry. It's going to be difficult for me to email everyone. So just, you guys just can send me an email and I'll reply. So that's the best way. Again, I'm not sure what the solution is. I really don't know what the solution is. But just keep in contact with me periodically, and I'm sure that we will find something that would work. Thanks very much, guys.